This is Alan Bush with the Daily Financial Forecast for Thursday, March 28th. Stock index futures putting in a very good performance today, even though the GDP coming in as expected up 2.2%. This is a downward revision from what we had earlier at 2.6% growth. Overall, it looks like stock index futures are performing very well. Quite often in the last couple of months, we have seen the indices overperforming the news, which should be viewed as a sign of strength. Moving over to the currency markets, seeing the dollar index higher and the euro currency lower. This due to factory orders in the Eurozone coming at a two-year low. So some negative numbers there. However, interest rate differential expectations in the longer term, I don't believe will favor the dollar or the euro one over the other, since it appears that the Fed is likely to be more accommodative. At the same time, the European Central Bank is likely to do the same. Also, we are seeing some pressure in the British pound with consumer sentiment index coming in rather weak in the UK. Interest rate futures markets steady to a little bit lower, not being affected that much by the GDP report. However, one thing that has changed rather dramatically recently, the probability of the Fed lowering rates this year. It now looks that at the September 11th meeting, there is a 60% probability that the Fed will be cutting rates by 25 basis points or more. So that quite a bit of a rather large change from what we had from late last year, where some analysts were looking for 3 rate increases. Even the Fed was looking for at least 3. That not the case this year. So stock index future still is my favorite long. This market performing very well, and I would expect higher prices today and also longer term. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.